This is a bearish candle. It's a bearish engulfing candle. Yes, it has the word bearish in it, which basically means that we've made a higher high, we've made a lower low, and we're currently below that low. So you might be wondering, is now the time to buy the dip or sell the rip? Well, that's exactly what we're going to talk about today. We already know the significance of July 17th, which is when the rally can start to fade. And stocks are not really waiting, right? Sell first, ask questions later. Netflix did report earnings, and the stock is basically mixed in after hours, down by quite a bit, and now snapping back to be only a little bit red. We also note that Biden might be stepping down as early as this weekend. So the Trump trade appears like it is here. It is going to stay, and it's likely going to get stronger. But now let's go through a couple of technicals, because on the daily chart, we talked about two things. We talked about how we wanted to see two lower highs and two lower lows, and for us to lose our uptrend. Well, what happened today? We lost our uptrend. We have two lower highs, two lower lows. And for 2 days in a row, we did close below candle lows. So the daily chart is definitely giving us a warning sign here. On the weekly chart, I'll be watching for one number and one number only. What's the number? It's basically last week's low. If you look here, this is still a bearish engulfing candle, but it actually comes back up to close back above the previous candle low. Why is this important? Well, because it basically means whether or not the bearish setup is optimal. So if we look to last week's low, it's 554.19. Where are we sitting right now in after hours? 553.9. So if we manage to rally up by roughly 20 cents and close back above that low, hey, I'm not going to say it's not a bearish engulfing candle, because it is. It just means that maybe we're able to go higher next week if things go well, notably on earnings, because we're going to have to see what the rest of mega cap does. The flip side to this is that if we zoom out even one more time, have a look at what the low of the week this week was. It was 550.43. So again, if we fell below 551, it means that we also had a monthly fail breakout, which means that we did fall back below the previous June high. As a reminder, the NASDAQ already did this. So you can see it. It's all the way back to flat on the month. And it is below that previous candle high. So you're confusing me a bit here, because we're talking about a lot of patterns. We're talking about a lot of numbers. All right, let me make this really simple for you. If we're going to repeat on the S&P what the NASDAQ's doing, all we need to do is close below 550. Second thing I would note, if on the daily chart, we talked about how we need to, I can't draw at all. We need two lower highs and two lower lows. Well, it's probably going to be the same thing here on the weekly chart, and we'd have to stop going up. So if right now we got one lower low and we're currently below, if next week we get another weekly lower low, where are we going to be? Well, we're going to be below 550. That's the current low of the week. It's at, the low here is, I'm looking at the NASDAQ. Whoopsies. Let's go back over to the S&P. So we're going to have one lower high, and the low of the week this week is 540.43. So if we get a second weekly lower low and we close below that low, by definition, we're going to be below 551. That is it. It's that simple. And as we talked about, the daily chart's going to feed through to the weekly, and the weekly chart will feed through to the monthly. So even if the bulls do manage to close back above last week's high, we're going to have to wait until the close of next week to really find out whether or not we get that continuation here. If we close at or near the low of the week, we usually get follow-through momentum. So it appears like the July 17th date is really working, and we're going to talk about whether we want to buy the dip or sell the rip. This is going to be really important, because we know, and I've talked about this a lot, the odds we're going to be higher are either 82% or 80%. But really, this is what it comes down to. And I'm going to ask you for a huge favor, please. If you could consider smashing that thumbs up or subscribing to the channel, that would be greatly appreciated. What it really comes down to is we know that other stocks are doing well, but this does not look particularly sexy to me. It's green on the week, but man, we're so close to losing that high as well. Same thing with the Dow, right? Man, it gave back a lot today. Yes, it did. It looks like people are a little bit concerned, because if we now zoom out, it still looks like the rotation trade is working, but at the first sign of weakness today, people went right back to what was working. I'll show you exactly what I mean here. If we go to the daily chart, we look at QQQ. It was actually doing, let's actually go to RSP. So in the morning, what we actually did was we were able to rally. So the rotation trade continued to work, but hey, then it fizzled, right? Two strong candles and then down, down, down. So what I'm basically trying to tell you is that the market is definitely starting to get a little bit of indigestion, like after Thanksgiving and you eat turkey, right? You got all the stuff in your belly. Now you're like, oh man, I don't know if I have room for that pie. I might have to unbuckle my belt or give it a little bit of time, which means what? Means to have a little bit of patience. Yes, the daily chart is starting to break. We cannot deny that, but we need to wait to get confirmation on higher time frames. If we're going to be selling the rip, it's very easy. What you want to look for is evidence, not just a theory. What would the evidence be? I just told you. Closing below that 550 area, 554 on the weekly, and then getting confirmation on the monthly with a failed breakout. Your risk is identified at the high of this month, which means if we go back above 565, the bears are wrong. That is the scenario to sell the rip. If you want to buy the dip, here's what we do. We remind ourselves that support is down at 522 for the month of July. Until we close this candle out, that's where you want to be ready to buy if you're a bull. Why? That's the higher low. Remember, higher lows and higher highs mean something specific. Higher lows mean that we're playing defense. So for most candles here, other than this one, the bulls have played defense consistently, which means they're defending the chart at a higher and higher and higher area. That's the higher low. But we don't win by playing defense. We win by getting points in the board. That's by playing offense. That's why I'm looking at hollow candles and closing over those candle highs. Why? It means by definition, we're expanding. We're getting points on the board. The bulls are winning. So that's pretty much it. I know that's very simple, but what I would encourage you to do is to tune in with me at 9:15 a.m. tomorrow if you want more details. If not, click on the left, and thank you for tuning in.